Good morning, good afternoon, and good evening, everyone. And welcome to another edition of the SunTec webinar series. I am Ashwati from Marketing at SunTec, and I will be your host for today. And before we get started, I want to give you a quick introduction on SunTec. SunTec is the world's #1 relationship-based pricing and billing company. Over 130 clients in 45 plus countries across the banking, financial services, insurance, telecom, and travel industries rely on SunTec to rapidly design and launch hyper-personalized products, offers, pricing, loyalty programs, and billing for over 400 million end customers. Our products are based on our cloud-agnostic and cloud-native, API-first and microservices-based proprietary platform Accelerate, and are delivered on-premise, on private cloud, and as SaaS. So to hone in on the session for today, as you know, the topic is around driving continuous digital transformation and the rise of the API economy. So what you can expect to hear from our speakers today is around how banks can reimagine their digital transformation strategies. They'll touch upon how the pandemic has accelerated banks' digital initiatives, what the key business requirements and starting points for digital transformation are, the need for digital readiness, and what the current state of the transformation is, and finally, the rise of the API economy and digital ecosystems. They'll also touch upon briefly on the concept of digital core and how that plays an imperative role in ensuring continuous digital transformation. Amit Dua is the president and global head of client-facing groups at SunTec. Based in London, he leads sales, business development, client engagement, alliances, and industry solutions functions for SunTec globally. Over the last 26 plus years, Amit has handled all the markets in advanced and emerging economies, interacting with global and local banks alike. And he's a keen business strategist and regularly comments on a range of banking and technology related issues. So over to you now, Amit, for your presentation.
Hello, everyone, and thank you for joining this webinar. Indeed, 2020 has easily been history's most stressful year. I'm sure all of us will agree. And 2021 would therefore be history's most anticipated year. Well, at least I'm sort of looking forward to it, with the hope of a vaccine, recovery in the economy, and hopefully growth. And now what pandemic did to the world is, of course, it accelerated the digitalization big time. And that's possibly an understatement. The other day, I was attending a session from the chairman and CEO of JP Morgan, and he was talking about the kind of things that he's always wanted to do in the bank happen at rapid speed thanks to the digitalization, thanks to their customers staying at home. In fact, drawing from our own company's experience, for years we've tried to confess with you guys, tried getting on some sort of shared digital collaboration platform, but it took us only 2 days for the entire company to switch to Microsoft Teams as soon as the pandemic hit the world. In fact, to a point that today, just out of habit, not even one-on-one calls happen on either a WhatsApp or a public network. Everything happens on Teams. So there you go. And that also shows in the growth rate of the companies like Zoom, like DocuSign. In fact, the chairman of JP Morgan actually indeed talked about DocuSign in his short address as to how that is so useful given the circumstances. The Peloton, I'm sure by now all of us know the exercise equipment company, the bike equipment company, which allows all of us to essentially get into, it almost makes you believe that you're biking with everybody in somewhere in the mountains, or any cloud solution provider. Look at the growth rates of all of these companies as a result of remote and collaborative working, or indeed leisure time activities like in case of Peloton. However, the key question I'm sure all of us want to ask is, how has it impacted the banks and the banking? After all, as a bank, how do you sell service and engage when the client is not able to even step out of his home, leave alone get to a branch. Now, it was okay for all of us to service a client on a mobile or an internet banking as a quote unquote additional channel, but it's a very different ball game if you're not simply able to allow the customer to get into the branch at all, because that is when quote unquote fake digital gets completely exposed very, very quickly. If the bank is not able to open an account online when the government was distributing subsidies all over the world, and the SMEs and individuals had a scramble to open the accounts. If the bank was not able to open account online completely, or have a personalized conversation, or indeed send proactive alerts for them to manage their money, the survival itself becomes an issue, right? So that's the context we are in. Just talking about digital transformation, the point I'm trying to make is that the pandemic has made it necessary. And the other topic, of course, in the subject itself is the rise of API economy and how the digitalization is connected to that. Uh, Open banking enabled by open APIs is now, as we all know, firmly embedded in the financial services, and that puts customers in control as to what, number one, product and services, including the partner products they consume, right? So the customer controls that now. And second, from which service provider they wish to buy these products and services. Because remember, a TPP or a AISP, the third party payment provider or a account information service provider kind of facilities, like it started in UK, open banking, it gives the choice to the customer to originate that kind of request from a third party instead of interacting with the bank at all, right? And therefore, it is not only the banks who can emerge as the customer owner or owning the customer relationship. Indeed, it's the fintech and the much feared GAFAs, the Google, Amazon, Facebook, and Apple companies who have the data, who are serious contenders for delivering the financial services in this change context, right? That said, the banks, of course, as we all know, still potentially have the best starting advantage given that they have customers' data. And I'm saying it boldly and loudly that it's customers' data. Remember, not banks' data, because that's how most banks, with no offense, have behaved in the past. Today, they realize it's customers' data, and with the consent, the customer would allow third-party companies to access their data and provide services. And the second thing, other than customers' data, they have is the customer's trust. An invaluable asset. So these are the two things. So effectively, in the subject, the digital transformation and the rise of API economy, both put together, are leading us to a situation where we thought we are compelled to look at three forces shaping the banking landscape. The first one being completely changed customer expectation, the customers who's used to an experience from GAFA companies and so on and so forth. The second, a radically different competitive landscape thanks to both the neo and challenger banks as well as the fintech companies, proliferation of them. And the third, the technology needed to deliver the kind of customer experience that we've been talking about in a collaborative ecosystem, right? We'll look at each of the three of them very, very quickly. Let's jog our memories to refresh the customer experience about 15 to 20 years ago. For those of us who are old enough to be banking then, those days, you'd remember, we'd walk into a branch, our relationship was tied to a branch, and as long as you knew the branch manager well, you got a great customer service. The day branch manager didn't turn up, you also didn't turn up at the branch, right? And therefore, the customer experience was defined to your own branch. And therefore, let me just call it the choicelessness is what really defined the customer experience. Things began to change, of course, around 15 years back when the bank started centralizing their systems, which allowed them to service a customer in any of the branches. Today, it seems naturally table stakes. That's when things really started to move towards today what we call as positive customer experience, because now you are treated as a customer of a bank, not just a branch, and you also have choices to be able to move to other banks in any other city or country for that matter. Uh, Fast forward the clock, and customer expectation today is a different world altogether, of course. The consumer wants to, today's consumer wants to be alone in a room in the evening with over 1 billion other users on Facebook, right? All of us are familiar with this. Uh, the today's consumer is very comfortable in scouring for deals on the internet and doesn't really care much about loyalty, leave alone financial services provider loyalty. He or she wants to bank while waiting in the Starbucks queue, or indeed while boarding a flight. Well, soon enough. Uh, he or she also want unobtrusive, ubiquitous, and immersive banking. So I was in one of the sessions being hosted by ex-CEO of ING up until recently, Ralph Hammers, and he made a wonderful statement. He said, "Look, my only chance of survival as a bank, and remember, this is a bank with 35, 36 million clients worldwide." He said, "Look, my only chance is if I can immerse the experience into their daily life. If I can offer banking to them while they are standing in a Starbucks queue. Because today's consumer actually thinks, with no offense meant, that banking is a sheer waste of time. They would do banking only if they're forced to, but make it as a part of immersive experience, and they are happy to deal with it. And open banking, of course, in today's context, gives customers plethora of choices, and we'll talk about that in a bit. So suddenly we move from total choicelessness with branch-based banking 15, 20 years back to plethora of choices today, right? That's the reason of customer expectation going very high to today, not just functional expectation by way of bank, providing them money and liquidity by, reducing their effort, saving them time by offering mobile banking. But today it's moved to they expecting that the bank will also have an emotional connect with me and will indeed provide me a helping hand in this distressful time, not just better price and value, because the customer is facing financial stress, reduced income, job losses, etc., and therefore is demanding more and more value out of the relationship. Just drawing from our personal experience, we've recently onboarded a client, and we see a pattern developing where the bank's customer increasingly want control over their finances and savings, thanks to the stress on the savings. So what they want to do is, over the self-service channel, where they were in the past able to check their balances and do a fund transfer, today they want to see their overall relationship on the channel. They want to see what are the offers uh, and bundles they're subscribed to, and therefore how much discount are they getting vis-a-vis a single product relationship. Interestingly, they also want to see, and I'm talking of here and now, I'm not talking of futuristic stuff. They also want to see what are the other products I'm eligible for, and if I subscribe to yet another product, how will it impact my discounting? So the customer, in short, is expecting more and more control, and that is what indeed the whole promise of open banking is. Like I said, open banking has provided more control over products and services to the consumer, and it has provided more control on who does the consumer uh, uh, avail these products and services from. So the bottom line, as far as customer experience is concerned, is that banks need to have an experience first mindset, not a product or a service mindset, not a quote unquote a cross sell mindset. Moment the bank says, look, this is my cross sell ratio, and that's what most banks tend to do, I think you've lost track of the customer need. While today, banks need to look at how do they fulfill a customer need or a customer goal, be it a travel goal of traveling to Hawaii tomorrow, or a house buying goal in 6 months, or indeed an educational goal for a child, for him to send his child to Harvard, right? That's when you start getting customer centric and providing a customer experience. Let's look at, having looked at the customer experience element, let's look at how the competitive landscape has changed radically. And here's a beautiful picture, a cluttered one, which gives you just a very, very small sample set of all the new or just challenger banks that have got set up in the world in last few years. Some of them are household names by now here in UK. Metro Bank amongst the first ones, Revolut, Monzo, etc. But you see some of the interesting names here. So there's a bank, I remember back in 2008 during the financial crisis, there's a bank that got set up here on your top right, called Civilized Bank. Would you believe it? Because the promise was that, and well, inherently they wanted to say that the banking is not civilized and we want to respect our customer. Or there's a Simple Bank, as some of us know, got set up by BBVA in US. Yet again, I guess the underlying connotation is banking is complex as far as the consumer is concerned. And here's a very simple proposition to you. Another one here, somewhere in the middle, Banco Original in Brazil. Again, to suggest that rest of the banks are not original by design. But I think for me, the ultimate example which takes the cake here on top middle is called Loot with a gray logo. This is one set up in UK. It's actually a digital current account for students and millennials. And would you believe it? They named it Loot, naturally a negative connotation. And sure enough, for a variety of reasons, not just the name, it went into administration by the summer of 2019 already. So I think just the point I'm making is the competition, the competitive landscape, thanks to the neo and the challenger banks, are huge. And in parallel to that, what's happening is the systematic unbundling of the banking services. Some of us are familiar with the amount of choices we've got available thanks to fintechs coming in and nibbling away at many banking services. I think the most interesting space is the payment space. There's also SME lending, which used to be one of the most underserved areas. Today, lots and lots of fintechs and new banks jumped in to provide services in that space. There's personal finance management, the PFM space, again, pretty cluttered now. I think the point is that there's a double onslaught on the high street banks, both from the challenger banks as well as the fintechs nibbling away at certain niche services. And that's the flavor of the competition for you. And that brings me to the point that given this competitive landscape, the every bank needs to make a conscious choice, and that choice is to either become a utility, low cost, high efficiency utility service provider, as you see on the left, or indeed become a complete customer owner, providing not just their own product, but also completing the whole experience via partner products. Because remember, like I said, open banking has brought in those choices of products and services to the consumer, and also brought in a choice as to which service provider do they go to for those products and services. But you'll also realize that, and Yost was alluding to that actually, Um, when most big banks will start attempting to form an ecosystem on the right, as it suggests here, by completing the customer experience and owning the customer experience, they will start competing with each other. They'll also start collaborating with each other. So a bank will be as first about on transaction as it will be about off transaction. When I say off, as in a transaction coming in from some other customer owner. So here's it's a scenario which will play out clearly. An HSBC which owns X million customers is consolidating the relationship for those X million. However, is getting many more millions of transactions from a potential tie-up with Amazon, which is getting in transactions from there. I mean, in fact, a couple of years back, I remember Deutsche Bank tied up with the very powerful WeChat in China with over 1 billion users now, and simply became a payment provider to those billion WeChat users from within the platform. So very, very nicely, Deutsche Bank doesn't own the customer experience in case of WeChat consumers, but is a utility service provider for those billion users for payment services. And so the point I'm making is that every bank will need to make a choice where to sit in this spectrum, because it's going to be like a double-edged sword where the inefficiencies of any of the partners in the ecosystem, if the bank decides to play the role on the right, is going to be exposed very, very quickly. As it happens in all the chains, the weakest link in the chain will determine the strength of the chain. So, for instance, if a bank is offering a home buying experience, the estate agent which it ties up with, if that experience is not good, is going to reflect on the brand name of the bank as a whole. Therefore, if a bank decides to own the customer by building an ecosystem, it will need to manage, monitor, and monetize the entire ecosystem. So right from partner onboarding to monitoring their SLAs, because that's where things go wrong. How do you fix those once they go wrong? Providing them some sort of loyalty benefits, and perhaps most importantly, monetizing the partner ecosystem becomes very, very important and a core capability that the bank will need to build. Just as, and I thought this is a good representation of the spectrum. So a bank could sit like in a coffee supply chain shown here. The bank could sit on the extreme left, by just being a producer of one or two products, but a very efficient one at that, to other banks and other ecosystems, or on the extreme right, providing an Armani experience, one of the best experience in Dubai, for instance, where an Armani coffee cup retails at over $15. An example from the banking world itself, a bank who decides to consolidate the ecosystem and own the ecosystem, as an example, will convert its experience from a simple mortgage product supplier to um, to a complete home buying experience, which it would want to fulfill for a consumer. Because when I, as a consumer, look for a new house, it is not just the mortgage product that I need. I need to first engage with an estate agent, depending on the country I am in, because in a few other countries it doesn't start with an estate agent. But let's say if I'm in London, I'd start with an estate agent first, separately speak to HSBC for the mortgage product. Eventually, when I'm moving house, I'll need an insurer. I'll need to interact with different utility companies like gas, water, electricity, broadband, etc. I will liaise with a home security company separately, a lawyer separately, and so on and so forth. So at the moment, I'm doing the entire aggregation, which a bank it can very well do and would do when it decides to own the ecosystem. And there are some great examples that have emerged in the other industries, leading the way. So here you see some of the logos which are amongst the best in their own industry category, but working within their industry, and therefore the innovation that they can bring about in their businesses and in their client experience are limited to their own capabilities. But you see a Uber kind of ride platform which they decided to leverage for Uber Rush, which is a delivery company, or Uber Eats, which is a food delivery company in specific, because of the commonalities of infrastructure and some of the platform that they own. Was very easy for Uber to expand on that. Or indeed here in UK, Tesco, which was a big retailer, got into mobile and then banking. But one of the best examples here in UK and perhaps worldwide being Virgin, with host of brands. And interestingly, for many of their brands, and that's the important takeaway from this slide, for many of their brands, they actually do not own the asset. Virgin Mobile, a classic example. Ironically, Virgin Mobile's customer satisfaction in UK is amongst the highest, if not the highest, compared to the others, while they do not own any underlying infrastructure to provide that service to their clients. So a great example of owning a customer experience by collaborating with other ecosystem providers. Having looked at the customer expectation and the competitive landscape, we'll move to the last section of my presentation, which is the technology part. And we'll look at what's the landscape today in many large banks and what do they need to do. And this, believe me or not, is an actual physical model, a picture that we took of a physical model in the lobby of one of the biggest banks in Europe, where they're kind of trying to demonstrate the complexity of the IT landscape in this global bank. Scary, isn't it? So many a times their fear is, if they change something, what will break? And going back to the point Jost made, nearly 80% of the banks say that they don't have the technology. There's a legacy they have to deal with, and therefore don't have the technology to provide a great customer experience. And here's another chart to prove the point that financial services is close to the laggards compared to all the industries when it provides a digital or a great customer experience. And most of it is down to the legacy systems and processes and the speed at which they can move. The traditional banks think of the sort that you saw a picture of, that their hands are tied because of their outdated core technology and the business models. And therefore, they look at many of these choices or options that are available to them to either renew or modernize or replace their core systems. Most of us know that the success rate of core banking system has only diminished from the past. Besides, expanding core systems to actually create a world-class customer experience and customer engagement doesn't help. It is suboptimal. It's a bit like trying to lift a pen with your elbow when actually God has given fingers for you to do that. And that's where we come in. And again, I go back to Yos's depiction of digital core on top of a lean core, as he calls it, which is the aggregation layer. And we like to call it as hauling out the core and setting up this digital core, which is called system of engagement, vis-a-vis the system of records that you have in the back office at the bottom of the slide here, and sits below the channel layer, which the banks used to interact with their clients. So it's a neat, it's a clean business and technology architecture right in the middle, which sits on top of back office and below the channels. And its job is to provide intelligence to deal with the customer, to provide prescriptive actions, and actually form the bridge between the top and the bottom layer. Of course, API based layer, and based on the whole principle of customer centricity to be able to provide a world class experience. And the blow up that you see of this digital core layer, by way of, so if you pan from left to right, we're talking of enterprise product management. So what does a bank need to do before it starts constructing meaningful offers, bundles, and products and services for its clients? First and foremost, ideally, it wants to get all its products into one single product catalog, ideally extending to partner catalog, thanks to open API and open banking, and then be able to easily configure these without taking much time. So if a business says, look, in my city, I want to service the SME market or the entrepreneurial business, the fintech business which is picked up speed, and I want a current account bundle to be able to service that market. The business cannot wait for the technology department to write code for it. Right? It simply just configures offer, which takes care of various needs of an entrepreneur who's setting up a fintech business in London City. And like I said, not just for its own products, but also consisting of partner products, pretty much like this simple to understand McDonald's example, where McDonald's sources the buns, the meat, the lettuce, and the cheese from different suppliers, but at the end of the day, delivers a customer experience which is seamless to its consumer, right? And go back to what I said earlier, the weakest of these ecosystem players would define the experience of the customer, the weakest link in the chain. So if the lettuce is bad, the burger tastes bad, right? So similar to that. And that brings me to the final slide of my presentation to summarize what Yoss said, and I tried building on that the digital transformation needs two things: customer experience and an effective ecosystem management. But delivering customer experience needs a digital core, which Yoss spent quite a bit of time on. And in effective ecosystem management, the ecosystem which has the minimum friction within needs a fair distribution of value amongst the partners, something that I talked about in a few slides. Thank you very much, and look forward to Q&A.